One of my students asked a question. Here's the question. When a support or resistance level breaks, the strength of the follow-through move depends on how strong the support or resistance is. Please, what exactly does it mean? Hello guys, it's Manuel here again. Now in today's video, I'm going to be explaining what this means. Stay tuned, be focused. I have a theory. It's called the Coke theory. We all know Coke. We all drink Coke. Coke is a soft drink, and you know it has a lot of gas in it. The momentum of which it goes out of the bottle depends on how you shake it. If you get what I mean. The more you shake the Coke bottle, the more the momentum it has to go out, to shoot out of the bottle. Let's do some practical. Here is the resistance, and here is the support. The more the markets bounce off of this level, the stronger it is and the harder it is to break. The more price bounce off of this level, the more the market bounce off of this level, the stronger the level is and the harder it is to break. Now what do I mean? Let's go for more examples. Here is the price. Price got here and bounce back off of this level. This is the resistance level. Bounce back, came above again and bounce back. Now resistance level is where sellers are found. So it means there are more sellers here. Like the sellers here are still stronger than the buyers because the buyers push the market upward while the sellers push the market downward. For the market to bounce off of this region and pull back, it means we still have, previously you had sellers here and the market got here and still pulled back. It means we still have more sellers here that are still stronger than the buyers. Market came back down and we still had more buyers here that are stronger than the sellers. Same thing. Depending on how many times market bounce off of a level, like the strength of a particular level depends on how many times the market bounce off of that level, and the harder it is to break. Get my point? The harder it is to break. Now we have a strong resistance here, and we have a strong support here. It will take a stronger. It will take a stronger buyers to break this resistance level. Now what do I mean? Let's say we have 1,000 sellers here, 500 buyers. 500 buyers can never break this level. See, the forex market is always a fight between the bulls and the bears. The bulls are for the buying, while the bears are for selling. And the bulls drive the market up, the bears take the market down. Now, let's say we have 1,000 sellers here in this region. 1,000 buyers cannot break this level because they are even. It will take more buyers to break this level. Now, this is a resistance and it has obstacle. It's not easy to break it like that. If there are only 1,000, let's say we have 1,000 sellers here, and we have more buyers in the market, like 2,000 buyers now, because they cannot carry anything less than 1,000 to break above this. Let's say we have 2,000 buyers in the market now. These 2,000 buyers, they will break. They can, like, the momentum now is enough to break this. Now imagine this was an obstacle and they came with 2,000 buyers just to break this 1,000 sellers. When they break, this is an obstacle. They will have some difficulty before they break, but they finally broke it because they had more momentum. Now just imagine when they were trying to break this obstacle with about 2,000 sellers, sorry, 2,000 buyers trying to break above 1,000 sellers. They succeeded. Now imagine what they can do when there's no other obstacle above. Let me bring this down. Now imagine what they can do. Like they had small obstacle here with 2,000 buyers. They had a little obstacle here, which is 1,000 sellers trying to drive the market down. But because the buyers are more, like they had more momentum, that's why they broke it. But it was not that easy for them to break it, but they broke it. Now they broke it. Imagine the obstacle, the little obstacle they had there before they broke it. Now, what do you think will happen with that kind of momentum when there's no other obstacle anywhere found here? It's just like putting on a weighted vest. When you go for your jogging, you put on a weighted vest. It will be very heavy on you, and all your system, your muscle will just adapt to the weighted vest as if it's your weight. When you jog for a while and pull it off, you can jump more than your limits. Why? Because your system was used to the weighted vest. Immediately you pull out the weighted vest, it's as if your strength is now doubled because the weight has reduced in half, which means your strength is now doubled. So that's why you can imagine the level you got to when you were with the weighted vest. If you pull the weighted vest, you pass that level like 10x. That's the same thing that's happening here. This region is like the weighted vest, and here is this region is like the weighted vest, and this consolidation is when you are jogging with the weighted vest. Immediately you got here, you pull the weighted vest. Imagine what you can do after all those exercises. You pull the weighted vest, you will have more strength. Like you did all this exercise with the weighted vest. Now you put the weighted vest and you know how you don't have any other extra weight on you. Imagine how you saw. That's exactly the same thing here. Just like the coke. Here is when you shake the coke, shake the coke bottle, shake the coke bottle, and here is when you open it. As you open it, pops out. And it pops out depending on how you shook the coke bottle. You understand what I mean? Same thing goes for the downside. The market came here, went up, came back here again and bounced off of this region. That's to show you that there are more buyers here. Came back again and bounced off of this region. So let's say we have 1,000 buyers in this region. Less than 1,000 sellers cannot break this region because they are lesser. We still have more buyers here. So it will take more momentum for the price. It will take more sellers momentum for them to break below. Now let's say we had or we have 2,000 sellers. Like 2,000 sellers came into the market, and while there are 1,000 buyers restricting the market from falling below. These 2,000 sellers will come here. There will be a little fight. Don't get me wrong. There are more than this doesn't mean the buyers will just agree easily. No. There will be a little obstacle here. But for the fact that the sellers are more, they have more momentum, so they can drive the price downward. So they will just struggle on this region. Then because they have more momentum, they break this region downward. Now imagine them breaking this obstacle downward. Imagine the strength they use. And now that same strength is what they'll still use in a region that has no obstacle, which means it will fall more because let's say they use 100% strength to break these guys. As they broke them, still using that same 100% strength, when there's no obstacle, it means they'll fall like crazy. Just like on a bike, when you carry a heavy load on a bike, the bike will not be that light, it will not run fast. But when you take off the load, which is this obstacle, the bike will be faster. Thus, I believe this explains, I believe this gives a better answer to this question. That's how it is, guys. Let me show you one quick real example. Here is the gold. Pair I have here with me is a gold, and I have a very sweet example here. Very sweet. Very sweet example, guys. This is the weekly time frame. As you can see, the market got here, pulled back, went up, went consolidated, got here again, pulled back. That's to show you that there are enough buyers here. There are sorry, not buyers. There are enough sellers here. Like there are more sellers in this region. The market came back here again, bounced above, got here, and still bounce off of this resistance again. That's to show you that the sellers that are here are more. Like they don't want the market to go up. So it would take a stronger, a stronger buying, like stronger buying momentum to break this region, this resistance. Depending on how these guys are strong, you need a stronger buying momentum to break it. Now, buyers came into the market like they were angry, like they were angry. They got into the market and was like, they want to break the market, they want to break the price, want to take the price above. They have to be stronger than these guys. So for the fact that they are stronger than them, they succeeded in breaking the the resistance. And that same strength they use in struggling to break off of this region is the same strength they are using in a region that has no other obstacle. Look at, there's no obstacle here. There's no obstacle. That's why the market went high, like the market soared high. Look at, from this region, it broke here. Look at, no obstacle here. There's no obstacle. That's why the market broke, like went crazily high. You can see that's the perfect good example of support and resistance. Guys, I believe this video has answered that question. But if you don't understand, like if you don't anything you don't understand, just let me know in the comment section. I will do well to refine more strategy on how to make you understand it. But I believe this answers that question. Don't forget to subscribe and like this video if you found it helpful. Whatever you think about this video, just let me know in the comment section. See you guys in my subsequent video. Peace.